You were listening to chartingwealth.com for the first day of the last month, December 1st, 2015. What's happening? Well, we start as we always do with IYY, which is a total market index fund. In other words, it tracks the whole market. What's the whole market doing? Well, over the course of the last 2-day candle that we have being drawn right now, we are slowly pushing through, not yet crossed over ending, but it's pushing through the 2-day trend line going down. We have an open red box, not a filled red box, but an open. We don't yet have a crossover going down on the 2-day chart, but it sure looks like it is getting close. If we range back to our 4-hour chart, we do see that the 4-hour chart penetrated going down and it's just about to cross over, but again, we don't have a parallel happening yet in the big chart, so we don't make that call yet. Now, when we go from the total market to the SPY, which is the S&P 500, Standard & Poor 500, what do we see? Well, we actually see on our 2-day chart, we're going to have to redraw this baby because things have changed a little bit since that was not a complete chart from where we tried to draw it. The candle had not closed yet. For those of you listening on audio, what we've done is we've redrawn using the candle on the 20th and the 25th, and we have a closed penetration going down of the 2-day trend line. We also have, it's not yet crossed, but it's getting awfully close on our MACD. Our derivative oscillator is already in the negative, has been for a few days, but it's actually losing steam. So again, we're not making a call that we have a hard crossover going down on the S&P 500, but it's getting very close on the 2-day chart. If we revert back to the 4-hour chart, we can see that it has crossed through the 2-day trend line, crossed over going down. Derivative oscillator crossed about the same time, which is typically a strong signal. Let's continue to watch that. Again, we don't have the confirmation in the big chart yet, but that may be coming in the next day or so. Now we're going to range back out to our 2-day chart. We're going to go to the Qs. What is the Qs? It's also called the cubes. It's QQQ as its stock market symbol. It is the NASDAQ 100. And what do we see going on there? Well, we have a 2-day trend line and we opened a little bit below it and have pushed up. It was an up day it was an up 2 days as far as the 2-day candle goes. It was a down day on actually all 3 of our indicators. It was a down day of 0.27%. So again, that is just a little over 0.25% down on the Qs for the day. Now, the 2-day candle is what we're looking at. It's actually an open green box, but we do have some negative emotions weighing. We had a crossover going down on the Qs for the 2-day chart. Now, if we look at our 4-hour chart, what do we have? We actually have the 4-hour chart crossing over in the morning going down, which means that getting into that play at some point this afternoon would have been a good move, or as soon as you see a good entry point tomorrow, as far as your virtual trading goes, that is something to definitely consider since we have a rarity. We actually have the 4-hour chart and the 2-day chart on the Qs crossing over going down at virtually the same time. Now, it is interesting that we don't have a penetration of the 2-day trend line, which is a bit disconcerting because it actually is still in a green up move. Now, again, we use the Hinki-Ayashi type of candlestick charts, which are different measurements, and you can look that up. Again, it's spelled HEIKEN-ASHI. I find it to be a much more effective candlestick, the Japanese candlestick method. But we do have that in the Qs, so look for a potential down play in the Qs, setting itself up in the morning. Again, watch how the market opens. Don't ever trade the first hour of the market. That is idiot hour. That's when the stops are being rated and the market makers have sort of free rein to do all sorts of things to make money for themselves. Wait until the market settles out at least at least 10:30, and then try to make your call. Again, we're not a stock calling service. We're not telling you what to do with real money. This is virtual trading in practice. So give that a look-see in the morning, see how that looks for you. Now, let's look at what's happening with gold. We see that our 2-day trend line continues to hold in gold going down. Gold actually for the day was up 0.67% for the day. And we will revert over to our 4-hour chart and see what we see. Well, we see gold attempting to finally cross over, going up after it had slipped over a number of times back and forth. It actually has gotten a little hard to read. Gold rotated back over at 1 p.m. on the 30th, started moving up in the morning. Actually, well, yeah, it looks like on the 27th, and actually confirmed that in the morning hours of the 30th, and has continued to move up. Typically, the 4-hour chart is a good one for us, but it did not work in the last iteration starting on the 12th of November. But hopefully it has bottomed out on a good hard bottom and will be correcting. It still has not crossed through the 2-day trend line, but that may be coming. Derivative oscillator is continuing to show some of its push down. Again, if you're waiting for some good solid confirmation, you might want to take a look at the derivative oscillator potentially crossing into the green, although again, but for this move going up back on the 12th, our moves in the last many months on the 4-hour chart has been a good one. So let's see if the 4-hour chart is going to come back into favor with this last kick up. See if that sustains itself, because the market really did go down, down, down. I mean, the hardest down that it has been in quite many, many, many months. So please continue to watch gold, see if indeed it pushes through that 2-day trend line, and if this latest changeover and up move is going to be confirmed by real price movement. Well, folks, that is how the week has opened. That's the way the markets ended on Monday. As they move into Tuesday, the 1st of December, let's continue to follow everything. Or remember, as always, caveats. Pay attention to the charts and not the noise. And if you don't already have our 15-minute How to Read a Stock Chart video, you need it. You can get it for free along with our charting layout. It functions here at freestockcharts.com. All you have to do is sign up for our newsletter at chartingwealth.com. You'll get our daily review and forecast. Once a week, you'll get our weekly review. And you will also get our 2 free bonuses, which is the charting layout from freestockcharts.com. It's a layout that works there. Plus, you will get our 15-minute How to Read a Stock Chart video that will help anybody understanding a little more about the stock charts, how to start using them, how to start reading them, how to start practicing, particularly using our techniques and our daily review. Thanks so much. We appreciate you being with us from chartingwealth.com.